Take that, investment industry. Oh, this is, man, I've got to read. All right, I haven't showered yet, as you can tell. Still wearing my shirt from last night, Ice Age Farmer. Haven't combed my hair or anything. Haven't shaved, just put my hat on. But I'm going through my early morning readings of emails. And, I get up at 5:30, and I just go through my emails first and foremost. I go back and forth between emails and finishing up my Wellington book, and I just gotta share this with you. It's freaking awesome. All right, hi Josh. I hope you are staying safe and healthy. Just want to give you an update on our financials. I became our own financial planner and now investing in Vanguard. We paid off our house. To date, we have a portfolio with going back to the barbell. She's keeping 4 years of cash. I also helped my mom transfer her investments to Vanguard and became her financial planner. I told her about our session, she talked with me, with you, and my mom was very pleased that now she doesn't have to pay 1% fee and her Vanguard holdings are doing well. I also told her to keep a few years cash instead of reinvesting. Now she has 3 to 4 years of cash, which makes her feel comfortable and secure. Basically, we implemented your barbell strategy. I listened to some of your YouTube videos many times. I feel I understand the strategies and reasoning. By the way, my husband will retire this year. He really looks forward to being able to do whatever he pleases. This literally makes me teared up, man. I know I'm weak. Like, that's not weak. It's the tears of joy. Oh. Thanks so much, Josh. Your videos are very clear and understandable. Wish I had found them earlier. Hope your business continues to prosper. You really helped a lot of people like myself. Oh, man. That's just, be your own financial planner, my friends. It's not rocket science. It's just not. And because the financial planning, and I'm just reading right now an article in Advisor Perspectives where they talk about the fiduciary versus commission based, and that's all silly. It's all noise. When it comes to, and I actually commented on it, I said, man, you guys in the fiduciary advisory business think you're all that in a bag of chips. I'd rather my mom pay 4.5% upfront commission for American Funds A shares, even with a 12B1 fee of 25 basis points. You don't need to know all that, but we do. Then 1.5% or 1% annual. And I said, isn't it ironic that when the market was getting tanked in March, Michael Kitces had tons of comments, he said. Now, he didn't see it the way I saw it by fee-based advisors asking, oh, my goodness, my revenues just went through it was getting tanked. What, I got to increase revenue. How do I do that? So, well, I thought when we were on the same side of the table, you see what I'm saying? Increase revenue by their clients. Nuts, man. So I'm sitting there thinking, be your own financial planner. The financial planning industry has made it seem like financial planning is investments, and investments are financial planning. Nothing can be further from the truth, man. Nothing can be further from the truth. Be your own financial planner. Save the money. Now, you need an attorney. You need a tax person who can help you figure out what the taxes are. Absolutely. And financial planners should be able to do that. The problem is how many can? None, or not, very few. How many financial planners actually look at your 1040 or even go into a 1040? Very few. Now, my wife is working for a CPA firm, and there's some stuff, and maybe I should do this for another video. But anyway, things like publicly traded partnerships, it's a freaking nightmare, man. All they do is they create commissions for financial advisors or fees for financial advisors, and they create huge tax work for tax people who get paid by the hour. Does it do anything for you? No. Is that financial planning? No, it's investments. That's it. But yet these guys are going to hold themselves as fiduciaries, financial planners, investment advisors, the whole thing. And it's a net loss to you as the ultimate client because all the fees you have to pay. It's crazy. It's crazy. The stuff I hear about financial advisors, I'm just like, man, you just go to the Vanguard index funds and be done with it. You don't have to pay some crazy tax people to figure out the complexity of publicly traded partnerships or K1s. Oh my goodness, it's nuts. Now, if you're a business person, you need high-speed business, legal, and tax advice. I guarantee that. A financial planner you need for seeing the big picture for sure, but not for this kind of intricacy stuff because a financial planner is a jack of all trades, a master of none. That's okay. That's okay. I'm a jack of all trades, a master of none. I know the tax code. I do for individual people. And when I'm saying married, filed jointly with personal people, I do not know when it comes to K1s and freaking 1031 exchanges and all that. That's where you need advice on that for sure. And you should be willing to pay for that advice. But on an ongoing basis to manage money, no. You should be willing to pay somebody for their advice for that you need today. You should not be paying a management fee year over year over year for the asset allocation. It's nuts. It's nuts, man. I just be your own financial planner for the love of the good Lord in heaven above. You're wasting your money. You're wasting your money. But Josh, don't you realize Vanguard did a study? That's just the whole thing. Don't you realize who else did a study? Don't you see was the Morningstar did and the Dow Bar study? That's all just silly stuff, man. The idea that a financial advisor is bringing this fees to your table bringing this fee savings to your table to compensate for his 1% fee is just silly. It's just silly. Now, if he could do that even better if he just charged it in a retainer, $2,000. I got no qualm with that. But charging AUM, assets under management, is wrong. Be your own financial advisor. All right. Thanks again for that email. Ooh, it makes me fired up. We'll see you.